What's going on? Today, I'm just going to be explaining how the stock market truly works, right? Why does the share price go up? Why does the share price go down? What is the logic behind basically the stock market? So basically, all the stock market is when a company decides to go public. This is also known as an IPO, an initial public offering. Basically, the reasons companies do this is because back in the day, back when the stock market first started, back in the 1700s, 1792, it was actually not because it's like, okay, it allows companies to grow faster. They didn't know that back then. Nowadays, if you look at it, companies are realizing if I go public, people invest money, I then have much more money to continue to grow my company, which is why people end up going into the stock market, making their companies public. It's because they then have access to more money. Same thing as if I wanted to buy a t-shirt, let's say it's $10, and then, I would have to spend that myself. But now if there's a pack of t-shirts for $20, it's a pack of 3, and I get 2 of my friends, well then guess what? Us, the 20 divided by 3, we have now much more capital in order to be able to do that. So the thing about the stock market is basically you just have access to more people's money, which allows you to expand and grow a lot faster. So the thing about this entire thing is you're basically, when a company goes public, you're basically paying the price that they're going public with. For example, Snowflake went public about a month ago. The original IPO price was $120. Warren Buffett ended up investing a lot of money. By the time it was available, not just to the earlier investors, but average day people like you and myself, the stock price was already at around $220. It almost doubled by the time you or myself could buy it. And it ended up going up even higher. It ended up reaching the 300 mark, and now it ended up going back down. And as of today, it is now at $230 after a huge 15% collapse, but it does bounce around between $220 and $280 on average. So we have around a $60 playing gap to play with as a day trader or a swing trader. But the point of the stock market is, if I wanted to buy some shares in a company and I was not a part of the first, let's say somebody ended up buying a part of a company of a lemonade stand, right? Let's say I have a lemonade stand and I'm passing out my shares, and I think each share is worth $1. The entire thing about that is, once all their shares are sold, I then end up seeing, okay, my friend has a share, he paid $1 for it. I'm like, okay, I think the lemonade price is gonna go so much higher. I end up giving him $2 for it because I think I can sell it in the future for 3 or 4. That is basically what the stock market is, or what stocks are. You pay a price based on what you think the company will be worth more in the future. Obviously, people do not want to buy the stock if they think in the future, hey, I want to pay $2 for this right now, but in a year it's only going to be worth $1.50 or even just $2. No, they always buy it thinking it's going to go up. The only problem is a lot of people just buy a stock randomly, or hear something on the news or from their neighbor, or hear and this and that, and it's done. And they buy it, and then it ends up falling, and then they sell it for a loss. That is how people then lose money. Because a lot of people do not understand the true investing of what it means to invest in the stock market, or why they're even investing. They just think, I'm going to buy this company, for example, Tesla. I'm going to buy it at 400, I'm going to sell it at 500, easy $100 profit. They don't do any research, they just hear about it, and then they go willy-nilly and buy it, and then they lose money. And then a lot of people, that's what happens to a lot of people at the very beginning, and then they're like, you know what, I'm done, this is a scam, obviously. That is the problem. People do not understand that you can also lose money in the stock market. It's not a guarantee. The only guarantee in life is a 9-to-5 job where you get paid. But again, you can also get laid off from that. The stock market is just a chance for you to see a value in a company. This is why Warren Buffett is one of the richest men in the world, because he does a thing called value investing, where he goes over companies spreadsheets, he goes over the profits, he goes over the revenue, he goes over every single thing and tries to find companies that he knows in the long run will end up making more profit that are currently undervalued. He has made one mistake in his life, and that was during the pandemic when he decided to sell Delta stock. I did not sell my Delta stock, and I'm definitely not saying I'm better than him. I just saw it due to the fact where the price was at, due to the fact that it was only a catalyst sending them down due to the pandemic, and that I knew the government would not allow them to go out of business. Because at the end of the day, once all of this is over, and yesterday airlines and cruise ships ended up going up 20 to 40%, it was just because people were afraid of flying. I'm still flying a crap ton right now. Obviously, I'm taking precautions. I'm wearing my masks. I'm making sure I don't have a cold or anything, and fever, nothing. But it was just a catalyst that ended up sitting down, and it was in the short term. So value investing is one of the best ways to get rich. But again, that then requires years and years and years of time because you have to go through their financials and everything. Another strategy you can do is just dividend investing. That is just where you buy stocks that have been around for 20, 30, 40 years that you think will still be around in 10, 20, 30, 40 years that pay a decent dividend. For example, one of the best ones, Coca-Cola, Johnson & Johnson, right? Coca-Cola isn't just Coke. It also makes water and different assortment of drinks and has a lot of smaller branches below it that supply life for people like us. So, do I think Coca-Cola is ever going to go out of business? No, I do not believe so. I remember during the pandemic, I ended up buying Coke shares, I believe at around $30. They're at $52 right now, right? That is a huge jump. I'm almost doubled at the money or something right there. And that is because Coke is just a great company overall, and they pay a steady dividend year after year. That is another investment strategy you can use. And again, you can then use another one called day trading or swing trading. That is where on a day trade you buy or sell the same stock within the day. So if I wanted to buy Tesla today at 400 and then sell it in 2 hours at 4 or 5, that would be a $5 profit. Now if I wanted to swing trade, I would buy Tesla today at 400 and next week I would sell it at 420. Again, it's that thing where you're not selling it on the day, but you're selling it within a certain couple of days, weeks, or months. And then anything over a year is obviously known as investing. That is a long-term play. Basically, that is what the stock market is. You're just paying someone else for their share of the company in order for you to then make profit in the future. Because if the person ended up buying it at $1, ended up buying my lemonade stand company at $1, they wanted to sell it at $2, someone was willing to pay them $2 because the person that paid $2 thought it could go up to $3, but the person that paid $1 didn't think it could go up to $3. That is what that is. And again, people have different goals. For example, when I buy a share of Tesla at 400 and I sell it at 4 or 5, that doesn't mean that I don't think it's going to go up to 500. But in my mind, I know it's not going to go up all the way forever. I know that it might the next day then be at 403, and then I can rebuy at 403 and then sell at 406, while the person that bought it 405 is holding on for a longer amount of time. Since there are different styles of investing, there are different opportunities in the stock market. Just because someone sells it at a certain price doesn't mean that that stock isn't going to go higher. It just means that that one person has a different style of trading or a different style of investing that they wish to do. That is all the stock market is people like you and myself buying and selling shares of a publicly traded company in order to make profits for ourselves and in order to basically have a chance at being a part of the American economy in that kind of sense. So that is all it really is. You're just buying and selling shares back and forth between people. It's the same as if I would be with friends and we would just exchange dollars and dollars for different pieces of paper. But this way, it is a chance to make money. Now, over the years, it has declined drastically. The amount of people that are in the stock market today are much, much less. Just due to the fact that a lot of people are living paycheck to paycheck currently, so they do not have the ability or the time factor in order to take their time and invest in the stock market. But today, however, the bad downside of that is a lot of people are just investing blindly, which then causes a huge hype run, and then it just collapses insane amounts. That is the tricky thing today. So that is why long-term investing in just one company is not smart. This is why Warren Buffett bet the top hedge funds that over a 10-year period, they could not beat a low-cost index S&P 500 fund due to the fact that it is steady. It is so many companies. It is not just one. And he ended up winning that $1 million bet, and he ended up donating it to a girl's charity. So if you're unsure about the stock market, one of the best bets is an S&P low-cost index fund. If you want to learn to take your time and learn how to day trade and make daily profits, $100, $200, $300, $400, $500 a day, then you would be a day trader. If you want to just do a weekly or monthly, about 1,000, 2,000 every month, or maybe 3, 4, then you would be known as a swing trader. Now, if you want to just play it long term, then you would do the S&P low cost index fund. Those are the different kinds. Now, if you want to do this as a business or a full-time, you would be doing it as value investing, which is what Warren Buffett does. So again, different things, different reasons. At the end, it's the same goal for everyone. You buy a piece of a company that you plan to sell in the future based on what your beliefs of that company are and what you think they can achieve and accomplish. That is what the stock market is. I hope this explanation helped clear some things up and the different ways you can invest, trade, or basically use the stock market to your advantage. But other than that, thank you guys so much for watching, and I hope you have a fantastic day.